Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to analyze Louis Vuitton MUY Hennessy or LVMH stock in detail and show you the fair value of the stock using my personal discounted future earnings model. LVMH is an inflation-resistant French multinational conglomerate and arguably the owner of the best luxury brands in the world. LVMH formed in 1987 as a result of a merger of two companies of Moet Hennessy and Louis Vuitton. LVMH operates in various sectors including wines and spirits, fashions and leather goods, perfumes and cosmetics, watches and jewelry, and selective retailing. They already own and operate 75 world-class brands under their umbrella. LVMH owns the highest quality and the most iconic fashion brands in the entire world, particularly leather products including Louis Vuitton, Christian Dior, Marc Jacobs, Loro Piana, and Fendi. This is the most important part of their business, which contributes to 49% of total revenue of the company, and it is actually one of the best performing parts of their business too. Their organic sales revenue in the leather sector was up 16% year over year in 2023, which demonstrates the strong momentum in their sales growth even in an inflationary and high interest rate environment. LVMH also owns a family of perfumes, skincare, and beauty products like Christian Dior perfumes, Fenty Beauty by Rihanna product line, and Makeup Forever brands. Revenues in this sector also grew by 12% year over year. They also own luxury brand watches and jewelry businesses like Bulgari, Tag, and Tiffany & Co., which grew 9% year over year. The fastest growing part of LVMH business is their retail business with large beauty stores like Sephora, which grew 26% year over year and continue to be the growth engine of the business. Finally, they have a family of various wine brands including Moet Chandon and Hennessy. Wine and spirits is actually the worst performing part of LVMH business. Champagne and wine sections was up only 2% year over year, while cognac and spirits were down 12% year over year. And the overall sector was down 7% year over year in the most recent earnings report release of the company. Good news is that this section of the business brings only 9% of the total revenue, and the company management mentioned that the demand will be normalized in the coming quarter. In terms of the management, Bernard Arnault has been the CEO of LVMH. He owns 97.5% stake in Christian Dior, which controls 41% of LVMH. So Bernard Arnault has built a luxury empire since he took charge of the company since 1989, and he's now the second richest man in the world after Elon Musk. Before going into financials, I'd like to see that Bernard Arnault has been buying the shares of LVMH recently, which means he still believes the company is cheap compared to its intrinsic value. More importantly, LVMH doesn't pay any stock-based compensation as far as I know, which is something I love about the company. As you've seen, this is a stellar business with top of the food chain luxury brands and non-destructible moat in luxury sector of the market. Their business, as you can see, is still growing fast as they have organic and non-organic growth avenues in the future. Organic by increasing their sales in various parts of the world, increasing their number of stores, or simply the price of their products, and non-organic by acquisition of other luxury brands as they are the largest luxury business in the world. On top of this extremely fast growth, the business has extraordinary profit margins. They have a gross margin of 68%, an EBITDA margin of 35%, and a net margin of 18.9%. And their profitability metrics are one of the best in their sector. For example, let's look at the return on invested capital, which is around 17% in 2023 and 13.6% in the last 5 years. This is significantly higher than the cost of capital, which means LVMH is good at making profit using their invested capital and equity. In terms of the valuation, the company actually trades at an attractive valuation at the moment. I personally buy ADR version of this stock in Canada, which has a ticker symbol of LVMUY. Compared to historical averages, LVMUY stock is currently trades at a PE of 21, which is significantly lower than its 5-year average of 33, a price to cash flow of 19.9, which is again lower than its 5-year average of 21. The company also pays a small dividend, which is not significant, but it is always nice to have a little bit of cash flow. Of course, I should mention that there is a French withholding tax if you receive dividend from LVMUY in Canada. The company also does small buybacks, which is again not significant, but at least they are reducing the total number of shares outstanding slowly over time, which is nice. The company has some debt on the balance sheet, but it is not significant compared to the assets of the business and also the free cash flow that this company can generate in a year. And as the business has an extremely high ROIC, return on invested capital, I don't worry much about the debt level of the business, as they always can make more profit by borrowing money. Finally, in terms of the analyst estimates, they are expected to grow their revenue by 13.3% for the next 5 years. Okay, now let's try to find the fair value of LVMUY stock based on my personal discounted future earnings model. To start building the model, I imported a series of general parameters from LVMH earnings report, like the current share price, their revenue, their number of shares, their net debt, which is their short-term and long-term liabilities minus their cash or cash equivalents, and their diluted earnings per share. I also put my expected rate of return to be 12% for this stock to have a little bit margin of safety. Now, in this model, I will calculate the fair value of the stock by projecting their future earnings and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case, or the most negative case for the stock, the business will have a little bit of margin compression. I consider them to have 0% share-based compensation and share dilution, and be able to grow their revenue by 10% in the short term, 9% in the midterm, and eventually by only 8% in the long term. And I considered a terminal multiple of 17, which is in agreement with historical ultra bear periods for this stock. For base case or normal case, I considered a little bit better margins in line with their historical average, a little bit better revenue growth, and a terminal multiple of 22, which is historically an average multiple for this stock over longer periods of time. Finally, in the bull case or best possible outcome, I consider them to have a little bit of margin expansion, a 15% short-term, 14% midterm, and 13% long-term growth, and a terminal multiple of 27, which is a bull multiple for the company. Now, if I hit calculate, the software will give me some valuable information about this stock based on my assumption. It gives you the intrinsic value of the stock in each scenario, and then it will provide you with a fair value estimate, which is around $174 per share for LVMUY, and comparing to the current share price, LVMUY trades at almost 15% discount today. It is a buy according to the model, and the stock is undervalued based on my assumptions. Overall, I personally continue to buy LVMUY here, as I believe the stock is extremely high quality and it is trading at a discount to its fair value today. There you are, guys. I hope you enjoyed the video. So if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.